been the talk of the day, and I'm going to keep talking about it a little bit because it pertains to what we're doing. So, um, anyway, news broke in Anson County earlier today. For the people who aren't in business, that Walmart was closing. Um, it wasn't a big surprise to me because Walmart has been on the pending list of Walmarts to close now for a whole year, actually a year and 2 months. So 14 months. It's been on this list because the list gets published after the quarter, and any store who has underperforming stores, they post the stores that they're going to close within the next 12 months because they want to show their stockholders that they can get rid of dead weight. And so this list has been out. It was put on the list in January, so it means that it was voted upon by the committee in 2018. So it wasn't just like an up and sudden thing. Like you just don't up and close a corporate store out of nowhere. This was years of Walmart underperforming. And then when you look at why stores say that they're closing a particular store, they do so because of business reasons, whether it's um, underperformance, whether it's it could be a whole lot of reasons. Bad location. They name the reasons why. So poor profits, underperformance, and then the second reason was mismatched merchandise, which in corporate terms means theft. Because every time you go to a store and they scan that item comes out of the store's inventory. There's a reason why they have to call a manager over and type a code in anytime you're like, oh no, I'm sorry, I don't want that item, because they have to tell the computer to put it back into the store's inventory. So if you're walking out the store and it doesn't get scanned, the store thinks that item is still there. So whenever the end of the year comes around and Walmart's like, hey, let's do an inventory of your store, which they do of every store. If you say, okay, according to the store logs, we're supposed to have an example, 100 TVs, and they go back there and um, they pull up the records, and it's like, okay, your store is supposed to have 100 TVs, but the SKU only shows that 50 TVs got scanned out, and you go back there and look, like you're going to have missing merchandise. Like if you have that missing merchandise, that was hard. Like the way I just described it was horrible. If in the store you have, let's say, 10 TVs, and according to the SKU, according to the store log inventory, you're supposed to have 100. Like that's a big deal. Like that's how all of this works. So when corporate goes in and corporate looks to see, like, okay, every Walmart has some level of theft. Every retail store has a threshold. It's called a market. It's like a market threshold for what theft is supposed to be. Like theft is supposed to match and not necessarily be above the national high for what theft is. If it is, that's a problem. And if theft is higher than the relative theft for a neighborhood, then that's a significant problem. Well, that's what Walmart was experiencing. Walmart had significant thefts. And then, of course, you guys can probably guess around the times of the year that it was happening. Black Friday being the number one culprit. And what just happened Black Friday? What corporate numbers were they just calculating from Black Friday? So if they're looking at these SKUs and they're seeing that there's supposed to be product and there's not, that's an issue, especially when it's big ticket items. So um, I put together a PowerPoint. I've been working on it all day because I have 10 or so different PowerPoints that I have been trying to put together into one big PowerPoint. Um, Some of this stuff you guys have seen before. Um, some of it is new material, but I really want to get to the heart of like what it is that we're doing here because um whenever we're talking about forex, we're not just talking about, of course we want to make money, but this is something that you can use as a tool so that you don't have to depend on going outside of the home for a job if you don't want to. Um, it's a choice, not something you're doing by force. So I'm going to share my screen. I'm going to be skipping through like some of the slides and stuff just because um, they're not really relevant or they're out of order for some reason. Like either I didn't get a chance to put them in order or whatever the case may be. Um, but um, and I'm not going to do this in slideshow form either, unless you guys just really want me to, so that I can have more control over the slides that I'm choosing on the sides. So I've kind of put everything, like I said, that I've done as far as PowerPoints into one huge PowerPoint, still putting slides in here, but currently it's like at 58 slides and it's going to be a whole course, a whole Forex course, indicators, fundamentals, just the stuff that you don't necessarily get. You're not going to get this from going into the IM Academy. You're not going to get this from going to Baby Pips. These are things that I have taken from the market, things that I have taken from being a trader, not only in stocks, but also in Forex, and things that I kind of wish that I knew to kind of put along with my technical trading over the years. So these are terms. I promise you guys we were going to go over some terms and stuff that we see on the Forex Factory calendar. These are terms that you will see at least once a week. Um, and some of them you'll see whenever it's time for a bank official to speak, so about once a month or so. Non-farm payroll, you'll see that once a month. But all of these terms deal with the fundamentals, like what is it that's going on relative to um, either the retail sector or unemployment with jobs, but it all has to do with the people, their income, and the economy. So with non-farm payroll happens either on the first or the second Friday of the month. It talks about how many jobs were added or lost in that month. Today we had a preliminary, or I like to call it the preliminary jobs number from the ADP, which is another company that kind of puts out an independent job number. And so they actually showed an increase in jobs over this past period, which is good. We also had good business numbers that came out today. But whenever non-farm payroll numbers come out, it causes a short-term volatility in the market. And by short-term, I mean like that trading day and maybe into the next trading day, since it does happen on a Friday. Um, the volatility um, or the effects from this, I should say, happen over a course of time, but the volatility that actually happens in the market when the news comes out is high, and that high volatility lasts for a short period of time. So these numbers come out at around 8:30 in the morning. So your volatility lasts up until about lunchtime or so, and then depending on what else is going on in that day, it could last a little bit longer. But it's not the
Hold on
actual
one second. Hold on one second, Carmen. Um, I apologize for interrupting you, but one second. If you don't have a pen and notepad out, taking notes right now, you're really doing yourself a great disservice because what she's educating you on right now is so important when it comes to trading these markets, when it comes to trading currencies, when it comes to trading the indices, when it comes to trading precious metals, when it comes to trading cryptocurrency, when it comes to trading, period. So if you think you are just going to remember everything she's going off, unless you was blessed to be born with a photographic memory, if you think you're gonna remember everything that she's going over now just by memory, it's not going to happen. I've been trading for 3 years, going on 4 years, and I have my notepad out, taking notes in case you go over things that I myself don't know. So if you don't have a pen and paper out right now taking notes, you're not really paying attention. So I just wanted to add that because I know how people are, and I know how you do. You said my volume was okay, but what I was saying was if you don't have a pen and paper out right now taking notes on everything that she's going over, you're really doing yourself a great disservice right now. You think that you just remember everything that she knows right now off of memory, unless you have a photographic memory, then you're doing yourself a great disservice. I've been trading for 3 years, going on 4, and I myself have my pen and pad out right now taking notes in case she educates and enlightens me on some things that I myself don't know. So if you're not taking notes right now, you're really not taking this serious at all. You're doing yourself a great disservice. So I encourage everybody to have pen and paper in hand and to be taking notes on the things that she's going over right now because she really put a lot of time and effort and it's really for your best benefit because what she's going over right now is so important when it comes to trading currency, the indices, precious metals, um, cryptocurrency when it comes to trading, period. So I will highly encourage everybody to be taking notes right now. That's all I'm going to say. Go ahead, Corn. Sorry about that.
Okay. Um, so when it comes to non-farm payroll numbers, it doesn't actually matter what the number is. What the market cares about is how that number relates to what they were expecting. So, anytime you're looking at a number, that number is useless unless you can compare it to something else. And I don't care what number. Okay, phone numbers, that kind of thing. Yeah, those are arbitrary numbers. But when you're talking about like a height, when you're talking about weight, when you're talking about jobs numbers, you can't say it's high or low, big or small, old or young, unless you have something to compare it to. You can't say that a jobs number is good if you just say, oh, yeah, we had 100,000 jobs created. Okay, but compared to what? I need to know what you were thinking you were going to have in order to be able to say that that was a good jobs number. Because if you were expecting 250,000 jobs to be created and you only created 100,000, that's not good. But if you were only expecting 20,000 jobs to be created and you created 100,000 jobs, that's great. That's 5 times what you thought. So it has to be in relation to what they are expecting. So the Bureau of Labor Statistics is the government agency who puts out the job numbers. They have a website and it is bls.gov. I'll put it in the Zoom chat once I'm finished so that you guys can have the link. But it actually goes through, um, it breaks the jobs down by demographic, by state, by age, by gender. It breaks it all down so that you can kind of have a good understanding of it. So non-farm payroll, it might not seem like it's just uber important. Um, but whenever we talk about jobs, I know I've said this before, but I'm going to say it again because if a company is not doing well, that company has to make a decision on whether or not they keep a production plant open, a store open, a restaurant open, whatever the case may be. They have to make that decision. And if they're not bringing in the money, that revenue that they get from that store is used to pay the employees, also pay the bills, and then also pay for the maintenance and upkeep and for whatever materials they need to supply the store or restaurant or whatever it may be. So if a store is not performing well, um, then that company has to make a decision. Well, do we cut jobs and possibly keep it open and see how we do? Do we close altogether? Um, and that's like a big decision that gets made. It's not something that just gets done lightly. But when you have people that are out of work, that means they don't have an income, which means that they're less likely to spend. And when I say less likely to spend, I mean retail spending, like shopping in a store, because they want to make sure the household basic needs are taken care of. Then anything that's left, then that goes towards gas in the car, food, clothes, shoes, and then luxury, leisurely things, which some people might consider to be um, a need, but it's really a want. Things like going to the barbershop, going to the nail salon, getting your makeup done, or buying makeup, those types of things. Those are luxury leisure items that a lot of people often will put up in the priorities of things that have to be done. Um, but that's how the marketplace categorizes those things. So and back to how I started the Zoom call, we can talk about how this event that happened in Waysboro will affect non-farm payroll numbers. So you might not think that, or let me go back. A lot of people have talked about the economic impact that this will have on Anson County. And I started looking because I have access to stuff because I've owned Walmart stock for a while. I have access to reports, have access to read about states that have the best performing stores, the areas that have the best performing stores. And I've been trying to look to really see like what Anson County, what Waysboro Walmart was performing like compared to Monroe, Stanley, the ones that are like in the surrounding counties. And then also just really see like what the economic conditions are like. So I've studied, and I can also drop the link for the website in the Zoom chat where you can compare Anson County's economy to Union County, Stanley County, Montgomery County, any county in North Carolina that you want to, and you can look at it and you can see how Anson County is faring. And compared to the surrounding counties, we're only doing better than Montgomery County. So whenever we talk about jobs in Anson County, when we talk about pay in Anson County, when we talk about all these things in Anson County, non-farm payroll is that. Like North Carolina, when we start looking at the numbers for North Carolina and you go to the Bureau of Labor Statistics and you look at the numbers for North Carolina, you can pull up Anson County's numbers. You can look at the average pay. You can look at how many people actually commute out of Anson County for work. It's a lot of people. The last time I checked, over 40% of Anson County's population commuted outside of Anson County for work. And that was only people 21 and up. That doesn't even include teenagers that might commute out. That doesn't include, there was another population that I had taken out because I just wanted to see like a 10 to 15 year age group. So there are people who in education, in administrative positions that commute outside of Anson County. Most healthcare professionals that live in Anson County commute outside of Anson County because what healthcare facilities are there in Anson County? So when we start talking about non-farm payroll, and if that number matters to us whenever we're looking at the news, yeah, it matters, because when these officials are looking at jobs and they're trying to figure out what to do, you have to stimulate an economy at some point. You have to get some outside influence, something to come in and stimulate the economy. Walmart was supposed to be that thing for Anson County, but when you take advantage of certain systems that get put into place, and it's not everybody, but it only takes a few to ruin it for everybody. And regardless of what people say about um, the thefts and the mismatch of merchandise, it was one of the top reasons. It was the second reason behind loss of profit, which comes from mismatched inventories. So at the end of the day, we got to be mindful. Even if we have heard people talk about it and they laughed about it and they thought it was cute, like, we can't condone that kind of behavior and that kind of stuff, because that affects economies, that affects, going back to this, retail sales. Like, when Walmart has to post retail sales numbers, they can't put that they lost X amount of money because of theft. They just post a loss in sales, and then that makes Walmart stock look bad. That makes the U.S. economy look bad, and then that takes down the U.S. dollar. So all these actions, while you think, oh, that's one person, yes, but think about how many other people in the country are doing that. And then you think about the implications on the value of our currency. Every time someone steals something from a store, you are essentially devaluing, or they are essentially devaluing our currency, and you don't even realize it. And it's not because, oh, it's for the reason, I'll put it this way, it's for the reason I just said. It's because that when these economic numbers come out and these companies have to post losses, there goes the dollar, because the market reacts to that. And as I've told you guys before, the stock market reacts and the dollar moves because stocks are purchased with the US dollar. So, off of non-farm payroll, I'll talk about that a little bit more since those numbers are coming out on Friday. I don't want to talk about tariffs yet. What else I want to talk about first? Yeah, I guess it will be tariffs. All right, so tariffs. This is another reason why Walmart is suffering. So the Walmart in Waysboro was not the only Walmart that closed in North Carolina. Well, Walmart had 25 Walmarts in North Carolina that they're closing, and they have to close them all by April. So it was not just that one. I can tell you all of them. There's like one in Snow Camp. There's one in Durham. There's a couple in Charlotte. There's it's 25 of them. Anyway, but tariffs are the reason why this part of this is happening as well. But it's not one of those top reasons that was listed for our Wadesboro, but it is for some, because there were some Walmarts that were on the list that were in actually pretty good economic areas, but because of tariffs, these tariffs have been going on for a while. And what happens whenever we introduce tariffs into an economy? So we have heard President Trump say that we as a country, through his doing, we're going to put tariffs on China. What the American public does not realize, that in the US putting tariffs on China, we, the United States, pay the tariff. because a tariff is a tax that is put on products that we get here in the country to deter us and to get us to not buy it. Most people don't think about it. Most people don't think, oh, they're taxing me or taxing a product I would buy to get me to not buy it. People are still going to buy it regardless. So, to give you a really good example of that, Michael Bloomberg, when he was in New York, put a sugar tax on sodas and sugary items to get people to not buy sodas and all that kind of stuff. People still bought sodas and stuff. People are going to buy what they want, is essentially what I'm saying. They don't care if you add a 25% price hike to an iPhone. If they want the iPhone and that iPhone is now $1,200 when it could have been, I don't know, $1,000, they're going to pay that extra $200 if they really want it. They don't care. And so that's how tariffs backfire. And that's what happened this last time whenever we put tariffs on China, because the US just kept buying and getting the items in. China was actually smart and they quit buying soybeans from us. They actually started going to Brazil to buy soybeans, which is why our soybean farmers here were so impacted. And they had to put out stimulus or send out stimulus payments to the farmers because, China was like, well, we're not going to buy your soybeans. And we export about, I know it's over 60% of our soybeans to China. So that hurt us. Um, they we hurt more than they did. There were some ways that we hurt them when we implemented tariffs, but essentially we hurt a lot worse than them. So I'm talking through a lot of stuff that I already have on here, but I'll read some of it. So um, the tax is always paid by the importer. So like I was saying, items that we put tariffs on in China, so we'll give a TV as an example. If China makes a TV and we import that TV into the United States and we say we're going to put a tariff on it of 10%, well, that 10% of that TV's cost gets paid as soon as it reaches the U.S. mainland. So the U.S. Customs and Border Patrol or Border Protection, they actually pay, they actually get paid the tariff by whoever the broker is. So I'm pretty sure at some point in time you guys have seen like those big cargo ships with the big containers on them. Anytime they get to a port, there's someone with a clipboard or a tablet and they're scanning all of these cargo containers. So anyway, whoever the broker is for that particular cargo, that container, that shipment, they pay the tariff to the CBP, and then the Chinese government pays nothing. So anyway, that happens, anytime we're talking about putting a tariff on a country, listen to what those tariffs are and see if it really makes sense. When we put tariffs on China when we put tariffs on Canada, for just anything, like we exchange so much stuff with Canada, it doesn't even make sense. But you think about anything we put a tariff on any country for and see how much we really need that item, how much you use that item. We put tariffs on France for wine. Like, you know how many people I know of every day, even at work, that's like, I'm getting ready to go home and drink a glass of wine. Like, that's an item that we import a lot of. And most people, especially people who have money or people who have extra cash flow, they're going to spend the money, like I said, regardless, and they don't care. So since we've had this Zoom call, we've had our federal open market committee, the feds as we call them, they cut interest rates. And Jerome Powell kind of alluded to it on Friday that they were thinking about cutting rates before the next meeting, which is like sometime at the end of the month. Why they couldn't have waited the 2 weeks, I don't know. But anyway, everything that they just did is considered dovish policy. So when you're listening to the news and you hear them talking about the Fed and they're talking about, oh, the Fed is being very dovish right now, it means that they favor more loose policy to help stimulate the economy. So when you're dovish, you're trying to stimulate the economy. You're trying to give it a jump start. And usually you can do this by lowering interest rates. So the Fed felt like they needed to stimulate the economy because of the coronavirus and because of overall economic and global slowing, which means that the Fed already had started to see that not only was our economy here in the United States slowing, but those economies around the world. We are too interlocked with other countries and their economies right now to say, oh, we'll be fine if France fails, or we'll be okay if the UK fails, or if Japan fails. Like, no, we won't be okay. So you have to stimulate the economy whenever you sense that something like that is happening. So how does this stimulate the economy? So when you lower interest rates, that essentially helps to lower everyday rates that we deal with, mortgage rates, the interest rate of your car loan, your credit cards, bonds, and stuff like that. But that's not going to be immediate since they just lowered interest rates. Any bank that issues any type of loan that has an interest rate attached to it, they have 60 to 90 days to lower that rate. They don't have to lower it immediately, and that's a federal policy that was put in place in 2008. So while it's good that the Fed lowered these rates, the question is, if the economy gets better, are the Feds going to jack the rate back up again? Which means that some people might not have a chance to actually take advantage of the lower rates while we have them. The opposite of dovish, I'll come back to this in a second. The opposite of dovish is hawkish. So when we have hawkish policy, it means that we're trying to we increase interest rates at that point in time. You're trying to get ahead of inflation. You're trying to tighten monetary policy, and you're trying to help keep inflation in check, the economy in check. You're trying to prevent things from getting too hot. So some people would say the Fed should have increased interest rates a while ago because we've been in a market boom, a bull market, an increasing market for the last 12 years or so. And that's a long time to be in a bull market. I mean, it's not bad, but it's been very steep. So people are like, oh, well, the Fed should have increased rates to at least cool the market off a little bit so that we don't go too far too fast. Now here we are, the end of 12 years, and we've gone a little too far too fast. And we're having to lower interest rates because of a global issue. And now we've taken the ammunition away from ourselves in case we do have to stimulate the economy. We don't have too much farther to really go to do so. So anyway, that's a little bit about some of the terms that you hear me go over with you guys on Zoom calls. This slide right here that I skipped that talks about dovish policy. So the thing that I wanted to come back to and read and talk to you guys about, especially with a lot of stuff that we have going on with the coronavirus and stuff, is just what does a dovish policy mean? And so if I'm saying this for a dovish policy, the exact opposite is for a hawkish policy. So for dovish policy is weak economic growth. For a hawkish policy, it's strong economic growth. Um, when we think about dovish policy, we think about inflation decreasing, um, deflation, or negative inflation. We think about increasing the balance sheet. We think about loosening economic policy, cutting interest rates. So all of this is to stimulate to get the economy to grow. And so when I was talking about stimulating the economy of Anson County earlier, these are some of the things that I'm thinking about, because how can you implement some of these things to stimulate an economy? Like I said, it has to be an outside force that does so. Inflation, you can tell inflation's higher in Anson County because you can look at inflation by, geographical region. When the average pay, and I haven't looked at the average pay since like 3 or 4 jobs numbers ago. I can look at them and put them in the chat for you also with those websites. But whenever we're looking at inflation that corporate stores and that you pay for an item, that's national inflation. Those stores are going to be basing their prices off of an average that they come across nationally. It's not just going to necessarily be per region. Now, however, they do take regions into consideration. So that's why you can go to a Walmart in Durham or Raleigh, a Walmart in Charlotte, and then Wadesboro Walmart, and you'll find 3 different prices. But all of those prices are still going to be based on a national average, which includes that national inflation that the Fed tries to stay around at about 2%. So if inflation continues to grow, but people's wages aren't growing, because if you ask the typical Ansonian, when was the last time they got a pay increase? If they work in Anson County, I'm not talking about people who work outside of Anson County. People who work inside of Anson County, ask them, when was the last time they got a pay increase, and what was that pay increase? It probably not often, and it probably wasn't a lot. It probably wasn't even enough to cover inflation. So when you're thinking about a person who, for instance, may make $10 to $12 an hour, and they're working right at full-time hours, and then they got to pay bills and get food and regular maintenance for their house, apartment, car, whatever the case may be, and then possibly pay for medicines, help their kids. There's not much left after taxes, like to cover those items that I just mentioned. So all of these policies, all of these things, I'm trying to help you to see that they all relate to home. In some way, shape, or form, Anson County is either home, or we know somebody from Anson, or know of somebody who knows somebody that's from Anson. And so all of these things affect economies, affect us. Um, anyway, I'm going to go over, I'll show you some of the other stuff that I have in this presentation, but I'm not going to go over it. I'm just going to show you. And then we'll go over the Forex Factory calendar. So these are some of the courses that I have for right now. I'm probably going to reorganize them and add some more stuff at some point. But the 100 course is like a crash course to Forex, followed by fundamental analysis, which is some of the stuff that I just went over now. I'm going to add a ton of slides to that. Indicators, which we covered last Zoom call. Trading strategies, we kind of talked about a few of them using the MACD, the ADX, some of the MA crosses, but we'll definitely be going over more trading strategies. And then for the 104, I haven't really decided yet. But Pipology 101, this is that crash course. Just covering the basics of Forex, like what you need to know, what's traded, got some charts and graphs and stuff in here. Yeah, like it'll be really cool, like especially if you guys have people that you just want to get on a call to help them understand what Forex is, what it means. Like literally all the slides for the 100 course are done. I just have to clean them up and make them look more pretty. But all those slides are done. And then these are some of the slides that I went over with you guys about margin and assessing risk. I feel like these slides don't get old, especially where's the pip, whenever I'm trying to help you guys understand how to count pips for oil, Tamra. This is why this slide is important. So if you're on your phone, you can screenshot this. If not, then I can send it to you again, like as the group. I can send it to like you guys, the group in the WhatsApp. Um, and anyway, you guys can have this because whenever we're talking about like making sure like, oh, put your stop loss or whatever 10 pips in profit, you need to know which number to look at to actually put that stop loss, that many number of pips into profit. For the most part, when you're trading um, the commodities, so like oil, gold, it's the last dollar, it's the cent amount because gold and oil are only quoted out dollars and cents. That's why the pip count is different because it's actually dollars and then your 25 cent over here. JPY pairs is the second number after the decimal. Typically there's three. For pairs that are not JPY, it's the fourth number after the decimal, and there will be a fifth number, but it's the fourth one. And then if you're looking at indices in your demo account, because hopefully you guys have remembered that if you're trading indices, you need at least $250 to $500 in your account in order to do so, or else your account will get blown. And that's not even being funny. That's speaking from me seeing people literally blow accounts from not having enough money. It's the actual dollar amount for indices, and it's the actual dollar amount in Bitcoin also. So just remember that whenever you're counting your pips and also your account size, how to know what the proper lot size is. For your account. So if you have $100 account, you shouldn't be trading no more than a 0.01 lot size because that is a 1% risk. If you want to go up to 3%, you can obviously change this amount, change these numbers so that it matches a 3% risk. But I definitely don't recommend you guys risking more than 3% of your accounts. It's easy to get excited whenever you're trading and want to put in a lot of trades and stuff, but you know, you have to make sure that your account stays whole as well. And then the max number of pips per lot size. So just making sure whenever you're putting your stop losses on your trades and stuff, you know, making sure that your stop loss isn't going to help you to blow your account as well. Because if the market turns around and hits your stop loss, you know, you've lost that many pips. And so you just want to make sure that, you know, you keep your stop losses inside of your risk management also. And whenever I'm going to put a slide in this presentation that has a list of documents. I don't know if you'll be able to see it because I just did it. Hold on. So I have a couple of slides, a couple of documents that I'm going to put. This is one of them, navigating MT4 for any of you or for anybody who comes into the group and wants to know how to actually navigate MT4. This document I put together, I had to put a bunch of screenshots in here and put the arrows where they needed to be. This document was a pain and a pleasure to make because I knew it was going to be beneficial for whoever uses it. But this is pretty much like a how to actually a how to for how to actually go through MT4 and put all the stuff together as far as your trading is concerned. So if there's a trade that gets sent out in the group chat, then you'll know how to actually put it in for a pending or a market execution, how to change your lot size, then look at the price that the pair is currently at, putting your lot sizes, your take profit, if you want to take profit. If you're going to be in front of your computer or your phone, you don't necessarily have to put in a take profit, just monitor the trade. But then if it's a market execution, you definitely want to make sure that you know where the sell and buy buttons are and you press the right one, because I have on accident pressed the wrong button. It's not fun when you actually meant to be in a buy and you hit sell. Um, yeah, I've done that. Rookie mistakes. I don't do that anymore, but it wasn't fun when I did. So we're gonna go over the Forex Factory calendar, and it'll be very brief. So tomorrow we have OPEC news coming out. That's going to be the major news that comes out for the week, along with jobs numbers. And you guys can see my screen. That's going to be an all-day thing. That's going to affect oil, and that's also going to affect the Canadian dollar, because remember, Canada is the third largest exporter of oil in the world. Also, we have GBP and Canadian speakers tomorrow around 12 noon, so just be mindful of that. We also have Australian retail sales numbers coming out at 7:30 tomorrow night. Australia hasn't, they've been having a rough time with their news and stuff that's been coming out. They did have good news tonight, but I haven't really been able to really gauge the economy of Australia ever since they had that news come out at the beginning of the week. And then if you want, you can go to the Forex Factory calendar and click on this link for the Bureau of Labor Statistics to get the link to look at the jobs numbers. But like I said, I'm still going to post it in the chat for you guys. But that is one of the big things that's coming out on Friday. Canada also has employment news that comes out, but it's not nearly as important as the U.S. news, because the U.S. news usually takes over unless there's something significantly good or bad with the Canadian news, and then they'll throw it in there for a little bit. But because this is the U.S., they do focus on our news a little bit more. So we're definitely looking at the average hourly earnings, which is the pay for people, the non-farm employment change. So this is the actual job number itself. So when they actually talk about the jobs number, it's the non-farm employment change. That's the number of jobs that were created over that period of time, and then the unemployment number. So all of those things together are really in the jobs report. They only focus on the employment change, unless the other two numbers are just significantly bad. Does anybody have any questions?
No, ma'am. No.
I
And
wanted to know what the group was again because it's not on my phone when I
I
switch phones.
I responded to you. I send it to you. Cause
Okay.
and if they do got any questions, I just tap um I'm sorry, just text them out in the chat or whatever. Cause I know you got another class that you need that you gotta teach tonight, Carmen, starting at 9. So I answer questions or they can text them out in the chat and then you can answer them in the what's chat.
I do have one question, Carmen, right quick. That the last presentation that you were showing us, is that like a course we can take, like go through, or is that something you gonna teach, or how do we do that?
Oh, it'll be something that I do on one of our Zoom calls.
Oh, okay. So that's something you're in preparation to do.
Yes.
You all studious and stuff.
So how do you get access to the indicators that I missed in the last one?
I will go over. So if you guys want to go over the indicators and stuff again on Friday, we can. Otherwise, Monday, if that's a better day, we can go over the indicators again. I can also just pick a time if you don't want to wait until a Zoom call for us to actually sit down and just go through the indicators that I went over with them on the last Zoom call.
Okay, no problem.
Cool beans. Cool. Okay, so if y'all think of any more questions for Carmen, just text them out in the chat group in the chat and she'll answer in the WhatsApp chat group because she has another class that she has to teach. Um, she's running a little late, but it's all good. Um, y'all be first priority, but we will have classes and other students that teach other services that we offer. So, with that being said, I'll go ahead and get into the technicals. Okay, cool beans. Can y'all see my screen?
Yes.
Cool. All right. So as always, we start with the dollar index, and looking at the dollar did, as expected, continue to drop. Mainly because of everything that's going on in the world right now with the coronavirus. And so right now we're just waiting to see how the dollar reacts to these levels right here. The level that it's at now and this level here. Because we've already gotten the downward move that we were looking for. So as y'all recall, in the beginning of the week, we were looking for the dollar to continue this downward move right here. Mainly because of, like I just said, everything that's going on with the coronavirus in the world right now. However, as you can see, we do have this insufficient price in the market right here. So we are looking for the dollar to eventually come back up and fill in this insufficiency in the market. But time time will only tell when that's going to be. Okay. Give me 1 second. All right, cool beans. So, like I was saying, time will only tell when that's going to be, when price is going to come back up here and feeling this insufficient price action. So, for right now, all we can do is take it one step at a time. And so now, what we see going on right here is a consolidation. Price has been in this area, just playing in this range, and it hasn't broke that range in the last 1, 2, 3, 4, 5, 6, 7, 8. In the last 8 hours, it gave us a little push up, tested that area, sold off, then broke through that area, came back down, and now it's just been playing in this trading range right here. So what I'm looking for is either a push down, I'm looking for an aggressive candle to the downside, and then a retest of this level, and then either a push to the downside or vice versa. I'm looking for a break to the upside, a retest of this level, and then a push to the upside. Um, don't know which is going to happen because I don't have inside information on what the world economy is going to do. Only thing I can do is just wait for the market to show me, and then when the market show me what it wants to do, which direction it's heading in, and then I can make my play based off of that. Everybody understand that?
Yes.
Yeah. Yes.
Cool beans. And so, with that being said, we can go and look at the trade setups that we looked at Monday based off of this downward move that we was expecting out of the dollar this week. We can go ahead and look at GBP USD. And of course, you know that the dollar if we are expecting the dollar to move down, then we should be expecting GBP USD to move up. And so, as you can see, um, I erased the I erased everything that I had, but y'all remember I had this marked up like this, and we was looking for either a push down or a push up. But our overall bias was to the upside because of course we was expecting the dollar to move lower, and so we did get that push to the upside. And now so um this was our best entry. This was a beautiful entry. And so this why I be telling y'all to have y'all notepads out and to be taking notes and to be paying attention to these levels, because most of everybody on this call, we've been trading for about going on a year now, especially especially my students that's been with me since I've been doing these Zoom calls. And so y'all should already know, write these levels down. And so with this right here, y'all already know this was our entry at the bottom of this zone, this blue zone right here. Y'all know this was our entry, and our stop loss was right there. Wasn't quite a 3-to-1 risk to ratio, but it was a 2.5-to-1 risk to reward ratio, which is fairly decent, even though y'all know our motto is 3-to-1, but fairly decent. Um, and you had a couple of opportunities to get in right here. You could have got in right here, or you could have got in right here. And take profit would have easily been hit. And that was a profit of 95 pips.
with very little drawdown.
With very with hold on. Let me put my snipe on that thing.
Go on and do it, boy. Go on and do
Let
it.
me put my snipe on that thing. Matter of fact, let me put 2 snipers on that thing.
And both of them was on point.
So, yeah, man. Beautiful. Beautiful. Absolutely beautiful. And so now what I'm looking at is this move right here. So now, second take profit, I'm looking at another 85 pips for second take profit. So mainly, I'm looking for price to come back down, retest the top of this zone, give us at least 1, 2 touches, and then enter on the third touch. Stop loss will be below the previous low. And again, not quite at a 3-to-1 risk to reward ratio, but dang on near it, 2.9. So you might as well, if you round it off, you might as well say a 3-to-1 risk to reward ratio. Anybody got any questions about that?
No, this is making a little bit more sense to me, actually being able to see this in actual real time, like what you're doing. Because normally when I'm looking at it behind the scenes, I confuse myself. So this is actually very helpful.
Cool beans, yeah, because what all we do, man, I'm telling you, man, trading is not rocket science. And a lot of times we do confuse ourselves because looking at these charts, and like most of us, we never traded a day in our life. We're not accustomed to looking at these charts, and we're not accustomed to, following the trends of the market and all this stuff. So it looks like rocket science, but it really isn't, man. When you trade price action and market structure, it's like, it just, after a while, after you start to see it over and over and over and over and over again, it just starts to look like, you just start to like second nature. It's like you see right here, you see this zone, this purple zone right here, came from this structure, this level of resistance, this level of resistance, this level of resistance, this level of resistance. And then if you look and you pay attention, price broke that level. And then it came back up, touched it one time, touched it. All these little times right here. Look at all these little times it touched it. That's like, that's smacking you in your face, man. Like, it's literally smacking you in your face. It's showing you that, hey, look, I'm having a hard time breaking this. I can't get above it. Yeah, you're gonna have your wicks. You're gonna have your long wicks on your candles that's gonna, we call that the shakedown. It's shaking people out. That's trading off of emotion. Even right here, shook some more people out, because most people had their sell limits right here and had their stop losses right here. So let me show you what happened. Most people had their entries right there, had their stop losses right there. What did those wicks do to those people?
Took out the stop loss.
Took out the stop loss. And then what did the market do?
And continued on in it.
I'm telling you, it ain't rocket science, man. And listen, it's not. The easiest way to trade is to trade price action and market structure. Same as that thing right here. What was price showing you right here? Look at this. Look at all these touches. Yeah, it went down. It went down a little bit. But guess what? Look at this. After this push right here, this is where your stop loss go. Up under here. And then once you get that movement right there, and you see this move right here, and price don't come back below this wick right here, that's where your stop loss go. Up on it. And you don't never just put your stop loss right right there on the wick. No, you put your stop loss at least 15 to 30 pips below the wick. Never just put your stop loss right there on the wick. You put your stop loss 15 to 30 pips below the wick. But look at it. It's not rocket science. That's where your stop loss go. Look at it. Ain't on it. Trying to get it perfect for y'all.
And I'm gonna tell you something else. When you're in IML and you're watching so many different people, and their trading styles, your style is enhanced because they'll probably have the same trade setup that you have, but then they have a later entry, and then their stop loss is kind of off simply because they aren't using those institutional candles like you're doing and not paying attention, like you said, to the wick, because the wick will screw you up every time.
Oh yeah. Oh yeah. And so it's like if you pay attention and you're diligent and you stay at it and you study and you take notes, you keep a trading journal. I stress this so much on keeping the trading. And I wonder why I lost over $2,000 in the market before I started keeping a trading journal. I wasn't taking it serious. I was just like literally just giving my money away, throwing my money away, just giving the market money. Take that. And then my mentor, by the name of Levi, was telling me like, yo, bro, you ain't got a trading journal. You don't even know why you took that trade. Like, if you can't go back and look at a trade that you lost, a trade that you were stopped out on, a trade that you gave, and if you can't go back and see why you took that trade, you ain't taking this thing serious. You just guessing. Every trade that I take, I can tell you why I took that trade. I can tell you the level of resistance that I was expecting it to bounce off of. I can tell you the institutional candle that I was looking to make the play off of. I can tell you the trend that I had seen that I thought was going to continue. I can tell you everything on why I took that trade. I wasn't able to do that until I started keeping trading. A lot of people didn't want to keep a trading journal. They just rather just give markets their money. I was one of those people. And so when you see these movements like this, and you see the market start higher highs, so higher highs, higher lows, higher highs, higher lows, higher highs, and then this right here. Let me tell this stuff. This right here should be a higher low somewhere in there. And then we'll get another higher high, higher low. Then we'll get a higher high, higher low. If the markets continue the upward trend. That's only if the market continues the upward trend. I'm not saying that the market is going to continue the upward trend because I don't know. And I'm not a billionaire, so I don't have buying power to be a market maker. I don't have the buying power to make the market go in the direction that I'm going. So I can only give you my technical analysis and opinion based off of market structure and price action. But what I do know is if price comes back down to this level and it respects this level, then the market can't go but one direction. And that's to the upside. Yeah, it might consolidate for a little bit. That's why my arrows is like this right here. It may give us 1 touch, 2 touch, 3 touch. Hell, it might give us 4, 5, 6, 7, 8, 9, 10 touches. But if it can't break this level and close below it and close below this previous low right here, okay, I'm just gonna sit and wait. I might go 15, 19, 20 some pips in the red, in the negative. But as long as it don't close below this last low, I ain't worried about it. I'ma hold it. And I'm gonna catch this whole 85 pip ride up. Straight like that. It's really just, my dad used to say, it's really just as simple as that. Market structure and price action. Market structure and price action. The simplest way of being a successful trader. Market structure and price action. This is structure right here. That's structure. Wyckoff called it accumulation. Y'all remember me teaching y'all the Wyckoff schematic, accumulation and distribution? That's all this is. This right here is distribution. This right here is accumulation. The market was accumulating right here to distribute, meaning that the market was collecting orders right here to distribute payouts. The market was accumulating orders right here to distribute payouts. Another word for this, we call it structure. Market structure. You can see it. Anybody got questions about that? Please ask me.
No, thanks for the insight on the trade, though.
Cool beans. Let's move on to our other pair that we were looking at this week. Euro USD. So as y'all already know, I was looking for Euro USD. I'm still looking for Euro USD to come down and test this structure right here, what I was just talking about, market structure. And so what I'm waiting on is for price to give me this right here. Come down, test the structure, come back up, capture this liquidity. More than likely make an equal high with this wick right here. And then show us what it want to do from there. But our play will be that's a good 3.5 risk to reward. That's easy, easy money. I ain't even spend too much time on that. Anybody got any questions about that?
No, sir.
No.
Cool beans. All right. Well, we'll go to my other play that I had for this week. This played out good. Um, as y'all know, when I went over this trade, the original trade, the overall trade setup for this is a sale. And I told y'all that this is the aggressive entry for the sale for the Aussie dollar versus the Japanese yen. And this is the conservative sale. But I also told y'all that I was looking to buy up to these sales. But that's just how I trade. And I don't recommend the buy. I didn't recommend the buy, and I don't recommend, counter. They call it counter trading. I don't recommend counter trading for y'all because, I don't want to put too much on y'all. I don't want y'all, to get confused or whatnot. But I counter trade all the time because that's just what I do. I'm experienced enough to do it. And so this trade was beautiful. Still holding this trade. I'm not logged into my account, so you can't see my profits right now. But right now, I'm currently up like 60 something pips. I was up more than that. I was up like 100 something pips, but I'm holding it. And it's probably going to give me a little pullback. It's probably going to give me a little pullback back down to here and then shoot up to here. So, don't be like me, because I get a little greedy sometimes because really I was supposed to, my take profit was supposed to get hit right here, but I went in and delete my take profit because I think it's gonna ride. I think it's gonna ride up here, man. So, yeah, man, I think it's gonna ride on up. So that's what I'm looking at now. But I am going to play it off of this area for the buy. I mean, for the sell down. I am going to play it for the sell down. Sell down to the entry. Put the stop loss above this high over here, which is going to give me a 5-to-1 risk to reward ratio. So still waiting on Aussie dollar JPY to hit this entry. Now, if you want to be more conservative, if you don't want to go aggressive like me, you can put your entry here for the sale and put your stop loss here, and you can aim for this structure right here. So this is the real play right here. This is the real play what we are waiting on. But me, I don't do nothing but sit in front of my computer all day and look at charts all day. So I be having time for it. I know a lot of y'all ain't got time for it, but I be having time for it. So I be counter trending and I be counter trading and everything. So yeah, it is what it is. But overall, this trade is playing out nice for us. It's building up. And it's gonna continue to build up. So we're gonna continue to watch it. Friday, we will probably have all of this be done played out by Friday. And the other one was CAD JPY. This trade did get activated. Mr. Montgomery, I don't know if he's on the call yet because he said he was driving. Let me see, is he on the call? Nah, he's not on the call, but he did take advantage of this trade. This trade was beautiful, right there in your face. 3.6 to 3.36 risk to reward ratio. Take profit was hit easily. We even got you could have got to take profit and some. Like you could have had a 6-to-1 trade on this one, but you know 3-to-1 was hit easily. We got this right here. When I gave this trade out Monday night at 8 o'clock, we was right in this area right here. We was right here in this area. And we was looking for the sell off of this level. And price came and touched this level 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times. So you had plenty of time getting this trade. And you won't risking nothing but 16 pips, 16.8. Well, let's round it up to 17. You was risking 17 pips for 56.5 pips. Beautiful, played out beautiful. And you could have let it run. You could have let it run. You could have let it run for over 100 pips. Beautiful, beautiful, beautiful trade. And so we ain't gonna dwell on the past. What I'm looking for now, I'm looking for one more pullback to it. Either here or here, and then we'll get the push to the downside. That's CAD JPY. And the reason why this trade right here is so favorable is because the Bank of Canada cut its interest rates today. And so that weakened the Canadian dollar. And so we can expect for the Canadian dollar to continue to go down versus the Japanese yen, especially with everything that's going on with the coronavirus right now. Most people are dumping their money into safe havens. And if you don't know it or not, the Japanese yen is a safe haven, along with gold and along with the franc. Those gold, the yen, and the Swiss franc are all considered safe havens. So when the economy is in turmoil like it is now, safe havens are going up and all other currencies against the safe havens are going down. Everybody understand that?
Yeah.
Yes.
Yep.
That's why you see. That's why you see this. That's why you see this. That's why you see this.
Good Lord.
That's why you see this. 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 And this is a trade that I was in that I didn't send you guys. And I apologize. I'll be, like I said, I sit in front of my, I work from home, and this is all I do. So I can't send out every little thing, but this trade paid out good this morning. Um, I got in this last week. This trade paid out over 200 something pips right here. This trade paid out over 250 pips. Um, this trade paid out about 80 pips. And then I'm looking for this to come back up and give me another entry right here off of 2095 from this level back down to either this level, back down to either about 100 and some pips, or even back down to here, Euro JPY. But yeah, so just keep that in mind. That's why learning the fundamentals is just as important as technical analysis. Because had I not know what I know now from learning what I learned from about, the fundamentals in the world economy, and how, the news and things going on around the world affect the markets, I wouldn't have never knew to make these plays. I wouldn't have never knew that, tariffs cause people to take their money out of currencies and dump it into savings. I would never knew that a coronavirus scare cause people to take their money and dump it into safe havens like gold and yen and Swiss franc. I would never knew that. I would have still been just up here doing my little technical analysis, thinking I'm dope or whatnot, and getting my head busted. But now that I can incorporate that into my trading plan, my trading strategy, it makes me that much more better of a trader. I'm a well-rounded trader now. I'm not just dependent solely on technical analysis, and it makes a world of difference, man. Like, seriously, straight up. So let's look at gold. Um, Gold is, look what gold is doing right now. Gold is building structure. Gold is building structure off of what? This structure. And so what I'm waiting for is some breaking news to come out to either cause gold to move down, to sell off, or to buy up. And what I think is going to happen, just because gold needs to hit the 1700 price, they're going to keep downplaying this coronavirus thing. This is my opinion, of course. they're going to keep downplaying this coronavirus thing like they have it under wraps, and that's going to cause gold to come down and retest this level 1600, 1594, 1595. And then it's going to be some old bull crap happen. Breaking news come out that's going to cause the dollar to rally up to, I mean, not the dollar, I'm sorry. It's going to cause gold to rally up to 1700. Because for one, this insufficiency needs to be filled in. That needs to be filled in. This gap right here between the last time the market sold off and the last time the market bought up is no selling being offered in this area right here. Since right here. Since right here, no selling being offered in this area. The market doesn't like being unbalanced. So it has to come in and fill in that imbalance. Now, it could come and fill in this balance only to right there just to fill in that gap. But I would like to see this structure retested because I don't think that they're just going to let people buy off of this area. I think they're going to stop these people out. So I think they're going to drive the market down to here, maybe even down to here before they push the market back up to 1700. Anybody got any questions about that?
No.
Nope.
We'll look at Bitcoin. Bitcoin pushing back up. Bitcoin pushing back up. Bitcoin played with us a little bit this week. When I gave y'all this trade for this week, the entry that I gave, price was right in this area right here. So we did have some good drawdown on Bitcoin. We did have some good drawdown. We had about 184 pill drawdown. So if you didn't take profit off of this 100-something pip gain, then you probably got stopped out, which is cool. I mean, it's cool. You should have risk management in place, of course. But as you can see now, it's back in profit. If you was able to hold it, or if you was able to get back in at this level right here, if you was able just to get back in at this level, you'd be up 90-something pips right now. And I think that, in my opinion, I think that price is going up to 93.42, 93.50 in this area. And so that's my opinion, of course. But Bitcoin ain't got nowhere to go but up. We may get pulled back or whatnot, but Bitcoin ain't got nowhere to go but up, y'all. So anybody got any questions about that?
No, sir.
No.
Okay, well, US oil, I'm waiting on oil to come back down and give us a retest of $46. Because we got this going on right now. Got this structure. And now what I'm looking for, I see how it's stutter stepping right here. It's having a hard time getting back above this level. So what I'm looking for is it to come back down to like $46 and then coming up and filling in this insufficient price action over here. That's what I'm looking for. That's easy. Looking forward to bounce off of this structure, of course. And continue to the upside. That's easy. Anybody got any questions about that?
No.
No.
Cool beans. Overall, anybody got any questions that they want to address to me about the session tonight? About anything?
As always, good stuff.
Cool beans. Cool beans. We gonna tear them up this week. It's already been a good week. Nobody should have occurred any losses, but y'all know whenever you go in profit, move your stop loss to break even to secure your account, to secure your money, secure your bag, and everything after that, just let it ride and take profits along the way. So everything looks good for this week. Everything's been good for this week, and I look to end the week off with the bang. So yeah, man. Happy pipping to everybody. I look to catch a lot of more pips by the end of the week, man. As always, y'all have a good night. Let your loved ones know you love them while they're here. Peace and blessings.
Good night.
Good night.
Good night.
Everybody.